Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that pump and dump on the Bitcoin chart. Guys, if we do just go straight to the charts, we can see that we do have a bit of this wedge formation going on here with a little bit of a zone somewhere over here. We have this zone back here. That really is what we broke out of, okay? So you can see that we had previously this channel going on. It was quite healthy and robust. We just popped through it, and now we're entering this consolidation phase after that huge drive to the upside, which really, began all the way down here somewhere around $27,000. And so this was a considerable drive to the upside, and it really is not unusual for price action to want to start to consolidate. You can see it here, but then you can really see it in this price action over here to want to consolidate and try to find some value areas after pushing up that hard. And so, guys, we're just going to have to deal with the fact that we are still consolidating after this massive drive to the upside. And I'm trying to visualize that with this wedge here. Now, these type of supply lines aren't really perfect. Ultimately, price action is king. We can always draw another supply line there, right, and make a new wedge depending on how things go. But currently, we did break out of just this little zone right here. We do appear to be putting in, this kind of quote unquote back test. And so if we do find support in this area, well, you can see the 9 EMA and the 21 EMA on the daily here. That could easily lead to a squeeze to the upside to perhaps retest our highs, where we do have equal highs here now on these wicks, somewhere around 43,400-ish. And of course, we could also test some liquidity up here around 44,000 should the chart gods will it. Now, if we do just look to the downside, you can see that we do have some type of supportive area over here around 36 to 37. We throw some volume on that, right? And you can see our point of control somewhere right around 37,300, just and some odd change there. We also see, the kind of limits of this structure coming in somewhere around 33,000, where we do also see the 200 EMA, and that tends to be a tough nut to crack on the daily. So yeah, maybe we wick below it, something like that. Maybe put a little bit of fear of God in the trading population should we come down here and just kind of grind it out in the lower 30s. But other than that, we don't tend to break under there. When we're in these type of bull trends on the daily. And so if this chart is to remain healthy, we would like to see it just maintain this region where you can see price action somewhere around that $31,000 area. Deviating below there, yeah, of course, we could, perhaps see this as a range as well, and then we would be looking at that $25,000 area as we were in the past, and just take it from there. But that's neither here nor there, because currently we are just bullishly breaking out of this little consolidation wedge, putting in a back test, where if we do find support, we could be looking to the upside. Now, guys, we can just go into a little bit more detail here. And you can see that we are still trending down on our Stoke, and usually we don't get a full reset until we reach the bottom of our Stoke here. Let's just go ahead and take a look at some things in the past and see if I can just validate this for you. Here we had our Stoke maxing out on the downside. We got a nice pump there, right? Maxing out on the downside. Yeah, we kind of grounded out a little bit, but ultimately we did end up putting in a new high as we explored all the way to the other side. Again, we put one in right here, and it did just grind its way for a very long time in consolidation, but ultimately we did reach the other side of the Stoke. and that ended up taking us to new highs as we just ended up wavering in this area. So the Stoke alone is not perfect. You can see there are some weaknesses here, but as long as we are maxing out at the bottom, there is a chance to pump. You can see another max out on the bottom right here. And again, guys, price action is king, but you can just use these indications for little pumps, okay? So just little pumps, just at this low pump, right? Bottom right over here, right? Maybe bottom right over here. Got a nice little pump there. And of course, in this area, you can see we were just driving upwards in the Stoke, and now we're resetting. So should we find a bottom in the Stoke, I would suggest that, yeah, we could grind it out a little bit more, but this chart probably would be ready for some expansion to the upside. Now, what can also indicate that we're probably still resetting a little bit? Well, you can see here on the RSI, we did just break out of the bullish control zone. So we're kind of at that neutral point of control that we may want to test it just a little bit more. So if we do come back down to our lows or just try to grind out this area a little bit more and just continue to consolidate, to see if we can hold that neutral point of control. Well, when the RSI puts in a higher low, then that might give some indication of strength coming back in the charts. And if that corresponds with some type of a turnaround on the Stoke, that would be a good indication. And further, again, I'm just trying to give you simple tools to take a look at the snapshot of the health of the chart here. You can see that on the BBWP, that's a Bollinger Band with the percentile, which is not an intuitive tool, so I don't necessarily recommend using this as your primary tool. But you can see that we are just consolidating. And we really haven't gone into an expansion phase. The expansion phase was really way back here, when we were at these lows of volatility, and then we ended up expanding to the upside. Now we can also expand to the downside because volatility is direction neutral. So again, don't rely on this oscillator as an up and down indicator. You will get wrecked. Okay. The MACD over here says that we continue falling as long as we're under 43,240-ish. We're currently under that value. So we'll see how we close the day if we hold this region or not. We're about 42,225. Not too far away. And so for you MACD traders, you do want to see a little bit of slowing in this downward momentum that we started to put in this consolidation area. So I think that's it just for these kind of simple indications. If we go over to my key levels, I did present these key levels in the group. So if you want to, just get a heads up on some of these things, you can go ahead and click the link in the description of the video below, and that'll just take you to the Alpha Commission group there. Guys, you can see that we did fill my momentum pool. Now the momentum pool is just a tool for entries. If we have a little bit of a change in momentum, right, we're driving up here, we have a little bit of pullback, we enter the pool, then you can usually get that as a nice entry to perhaps cross the pool and then hopefully continue, right? But it doesn't guarantee that we will continue, especially if the volatility pivot is over our head, because that will suggest a bias to the downside, and also that the price is just still consolidating. So that could imply sideways or down when the volatility pivot is over your head. If the volatility pivot was down here, then it would suggest that there's a chance that our bias is to the upside, but just based upon statistical likelihoods. And that would suggest that we would have a greater chance of expanding to the upside, should we reach these add or lose momentum levels, should we cross that bull zone and that general continuation line, which all seem to be huddled around 43,200-ish, 43,260 conservatively. And so, yeah, we got a first rejection here on this breakout. It's normal to have a little bit of a retest. If we end up doing something like this, right, where we have this pump of momentum to the upside, then we break back down, and then we cross back into the pool, and this volatility pivot has come down in the next day or two, such that it's supportive below the pool, then that could suggest maybe that's the breakout moment that's going to have continuation. But we're not there yet, so all we're doing is looking at what's on the chart. And the chart is telling us that we need to close above 42,650, basically this candle close, in order to have just hold our momentum to the upside here. Otherwise, we're just chopping around, just going sideways, right? We're not holding momentum to the upside, we're just going sideways. And really, we want to get above 42,860 at the close of the day in order to imply that upward bias. And then we re-enter the bull zone on the daily above 43,143. And for your most conservative type of front running for some type of a breakout, then that would be closing above 43,260. Now, guys, I don't really recommend to buy up there. Sometimes these pools are just informative. They're not necessarily trading tools on every single pool. Obviously, you want to buy low and sell high at resistance. You don't necessarily want to be buying at resistance. But you can see that if we do take out these equal highs that we have up here on a wick basis, that would you know, basically create a higher high on this little area right here. That could imply a higher low and perhaps even continuation as this structure here starts to round out or put in some type of accumulation wedge. And of course, we can see the bottom zone here where we did just a kind of wick out there into the previous channel that we had carved. And of course, that would suggest that if we broke down below 40,773, just this kind of, this collective wick area, that we might see the bottom of this channel and then losing that channel. Maybe we take that trip to 37. But currently, nothing is bearish, nothing is particularly bullish. Just this wave structure here is just getting tighter and tighter and tighter, and eventually it's either going to break to the downside or break to the upside. Okay, that's all we know. This is a little bit of a bullish formation in my mind, so I'm going to be still looking to the upside. I'm still going to be looking towards that $48,000 level just as a target in my mind. We've discussed that in the past in these episodes, but really we can just look at our current range and suggest that we should be looking at 43,500, maybe 44,400-ish, and just to play it by ear from there. But guys, that's going to be your alpha for the day. Stay safe. Again, there's a link to the group in the description of the video below, so feel free to join us. It is getting much more active now that the market is heating up, and we're just going to just try to look at our entries for altcoins should we have a break to the upside, and then also what's our stop losses. How can we protect ourselves should this thing start breaking down? We are getting towards the end of the year, and of course, a lot of institutions, a lot of people like to take profits at the end of the year. There's tax purposes, there's expenditures they may need to have, there's quarterly reporting, quarterly closings of accounting. And so just all sorts of things going on that could cause some type of a dumping at the end of the year or into the new year. And of course, we're still pre-halving, so we are really just looking at this whole push to the upside as some type of mid-cycle rally. It's not the full bull market; it's just the mid-cycle rally, that kind of first and second stage of the next bull market. And we're trying to get early entries on that, but that does imply that there could be the risk of some strong pullback. So we just want to be aware of that. Again, guys, that's your alpha for the day. Stay safe and happy trading.